For more on how this could play out for rates, let's bring in Michael Contopoulos. He's a Deputy Chief Investment Officer at Richard Bernstein Advisors. Michael, always good to see you.
Good to see you as well.
What do you make of the bond market remaining very calm, low volatility amidst all of this?
Yeah, I think it's telling us that a lot of this, stuff from the White House is really just noise. At the end of the day, what matters are fundamentals more than anything else. And I think the fundamentals right now are pretty unclear. And when you have unclear fundamentals, you stay somewhat range-bound until you have clarity, until you have a direction. And right now, there's really no direction. Do we have higher inflation? Do we have lower growth? What's the story?
Michael, last year, right around this time, there were debates about what the Fed should do again, right? And so we got that 50 basis point cut in September. Then we had, two more. What do you think it did for the economy? Like, here we are on the other side of that. There was a lot of trepidation. I know that they were worried about the employment, picture and that sort of thing. I mean, what did it actually do? We hear that phrase, long and variable lag. So I just wonder what another 50 basis points would do sooner than the market expects.
I'm not entirely sure it's done a whole lot yet. I mean, 50 basis points really isn't that much of a move. If you got another 50, 100, I think they would start to accumulate over time. But 50 basis points, I don't think had a huge impact on the broad economy. What was interesting is that the Fed cut rates at a time of accelerating earnings growth. That had never happened before. Just like in 2022, the Fed raised interest rates into a profit deceleration. That had never happened before. And what I do think it did is I think it helped to sort of give confidence back into the earnings cycle and the early earnings rally. I think that caused earnings to growth to accelerate a little bit longer.
Earlier in the show, I said that it doesn't, just because the rest of the world is doing it doesn't mean we should do it. I absolutely believe that. But I also believe that global bond markets are interconnected. I'll bring up I think 30-year bonds were introduced in 2007 in Japan. They're basically at all-time highs in terms of yield. JGBs, I think, are the highest since 08. Something. Bond market is moving in Japan. How important is that to watch what's going on over there for our bond market here?
I think it's very important. I think yesterday we saw some moves in the U.S. market, and that was largely on the back of what was going on internationally. So it is important. You can't really have the global economy or global rate markets doing one thing and the U.S. really buck the trend unless you get real serious divergences in either growth or monetary policy. And right now, that's not really the case. I mean, global growth is pretty much in sync. Generally speaking, central bank policy is largely in sync globally. And I mean, maybe that's a little bit off, but yeah, I think it's really important for sure.
You mentioned so many things are up in the air in terms of the economy and inflation and the impact of tariffs. At what point do you feel more confident about the result of our trade policy and what's going on with tariffs in the economy? Is it 2 more readings?
Yeah,
Three more? 1 more?
I think we need to see at least probably 2 more readings. We know that you had a huge front loading of inventory buildup in Q1. You're working through that now. You're starting to see earnings get hit, right? You saw this week GM earnings get hit. You've seen margins start to compress. Now, I think we're probably starting to see some of this come through in the economy, but I think it's very early days. We probably won't really know the full impact of tariffs on inflation until later this year. So I would say at least 2 more prints before you've got any sort of confidence in the direction of where we're going. And the ultimate landing place, I don't think we'll know for a little bit longer than that.